Well, that's what we're going to talk about in today's video. So my name is Dan Frio. I come out with videos every day to explain to you guys how to navigate the home buying process. And we also talk about mortgage rates on a daily basis. But today we want to focus in on those that are building that house. And now you're getting incentives from the builder's preferred lender. How should you use all those credits? That's what we're going to talk about in today's video. So here's what you're going to receive when you initially start your application with that builder's preferred lender. You're going to get what's called a loan estimate. So it's going to go through things like what is the loan amount, what's your interest rate, the monthly payment. It's going to go through costs and everything else. I'm going to show you an example of that right through here. And we're going to break this down. And what we're going to talk about is all the perks the lender gives you. And in most cases, it's between maybe $15,000 and $20,000. So how should you most efficiently use those to get yourself in the best position for the financing, well, right now and also in the future? Let's break it down. So here's what an average loan estimate looks like that you're going to receive once this process starts and you put in your application. So what you're going to receive is the loan estimate. It's going to go through and give you the date, the information about yourself right through here. It's going to give you also information about the loan. What kind of loan term is it? What the purpose of it is, the product, and a bunch of information down through here as well. It's also going to tell you if you're locked in or not. Okay, that's very important. Then it's going to go down and through and tell you what the loan amount is and the interest rate. Well, you can see this is back in years ago, so the rates were 3.875. It's more like 8.375 now, with a monthly payment of $761. It'll give you that. Then it's going to break down through here. It's going to give you your projected payments from year 1 through 7. And then 8 through 30. And the reason for this is a thing called mortgage insurance. If you don't put down 20%, you're going to need what's called mortgage insurance, and it's going to come in right through there. So after 7 years, in many cases, it drops off, and that's why this shows this. Then it's going to go down and through and tell you, here's what your estimated closing costs are. Here's the amount of money you're going to need at the closing. So now here's where the information really comes in that we really need to dig into. So this is going to show you right through here. This is the main piece of the puzzle you want to look at when it comes to the lender's fees. And here's the reason being is all the information down through here, this is out of the lender's control. So no matter what lender you go through, all the rest of these numbers are basically going to be the same. So your most focal point is going to be right through here, Section A. You're going to see in Section A when you're dealing with the builders, this is going to be excessive. They're going to charge you a lot of points, a lot of application fees, underwriting fees, and things like that. In most cases, that's what they're going to do. What I normally see is they're giving you a little bit above normal rates that you're out in the market, and they're charging you a lot of money to buy down that rate to the levels that you're looking at. So here's what I want you to do with this, okay? You're going to start seeing lender, you're going to see a seller credit down through here, and this is going to be what your builder is offering you. Okay, we're going to take that amount of money and we're going to use that.